Уважаемые зрители, участники, наши гости, всех рады приветствовать на финале нашего соревнования, проводимого IB-клубом M&A Case Competition сезона 22-23. Рады, что все подключились, нашли время в субботу послушать. Мы сейчас вкратце план такой, что вкратце расскажем про сам чемпионат, как он проходил, чем ребята занимались много месяцев, а потом будут выступления наших студентов, наших почти выпускников, и, соответственно, судьи их оценят. Надеемся, вам будет интересно. Мы ожидаем, что все это займет порядка 1,5–2 часов, все мероприятие. Если коротко рассказывать про M&A кейс, то сначала хотели бы поблагодарить нашего попечителя, это Ирина Владимировна Никитушкина, она нас вырастила, благодаря ней все это до сих пор проводится и возможно. С ее помощью и с помощью Сергея Сергеевича Студникова, экономического факультета МГУ, большое вам спасибо. Все это благодаря ним. Несмотря на то, что мы там большая, уже такая немаленькая организация, у нас много участников из других вузов, вот, ну, соответственно, корни у нас из экономического факультета МГУ. Соответственно, в целом, что такое IB-клуб? Мы обычно проводим два типа мероприятий. Это открытые встречи, они сейчас проводятся реже, либо закрытое мероприятие, которое подразумевает отбор, это M&A Case Competition. Наша основная задача и философия заключается в том, что инвестиционный банкинг и корпоративные финансы в целом это несложно, можно всему научиться, и главное желание. Мы подскажем, а главное желание и мотивация. И вообще основной наш value, мы считаем, что в нетворк. Соответственно, в рамках нашего мероприятия это финалисты, победители одного из чемпионатов, прошедших ранее. Мы скорее позиционируем себя как платформа для разного вида нетворка. Нетворк может быть как и среди студентов между друг другом из разных университетов. Он может быть также нетворк с людьми, которые являются организаторами. Мы где-то работаем, можем что-то подсказать. У нас много гостей, стараемся проводить неформальные тусовки, и все это больше про нетворк. Соответственно, основной целью нашего кейса является трудоустройство наших студентов, успешное трудоустройство. Мы всячески стараемся в этом помогать. M&A кейс – это образовательная программа, опять же, повторюсь, с прицелом на трудоустройство. Уже немножко страшно смотреть, но это 13-й год, когда мы проводим M&A кейс, 13-я сделка, условно сделка будет закрыта. Мы всегда стараемся делать так, чтобы сделки были приближены к реальности, и стараемся покрывать очень много разных отраслей. Наверное, уже все покрыли. В этом году, особенность этого года в том, что мы первый раз взяли международную компанию в качестве таргета кейса. Повторюсь, IB Club и M&A кейс в частности состоит из, по сути, двух элементов. Это образовательные семинары, частью команды организаторов, часть приглашенные гости. Они ведут образовательные программы, образовательные мероприятия, которые посвящены корпоративному анализу отчетности, корпоративным финансам, анализу отчетности, финмоделированию, вот этим всем вещам, оценке. И, естественно, мы стараемся использовать разные форматы нетворка. Повторюсь еще раз, мы считаем, что мы на входе, это не проверяем каких-то технических знаний, не обязательно вам нужно быть финансистом либо экономистом для того, чтобы попасть к нам на программу. Мы, наоборот, считаем, что если вы технарь, программист, физик или там кто еще, переводчик, получая дополнительное образование в виде корпоративных финансов, это может быть синергично и интересно для вашей карьеры в будущем. Основные этапы. Обычно мы в августе делаем пост о том, что мы начинаем новый сезон, в сентябре проходит отбор. Все, что вам нужно сделать, это прислать CV. Дальше обычно мы даем домашнее задание в виде подготовки тизера, и финальным этапом является интервью, которое достаточно быстро проходит, обычно 10, 15, 20. Дальше у нас есть 2 семестра. Мы проводим семинары, даем домашние задания, проводим экзамены. И, соответственно, дальше проходит полуфинал и финал. Полуфинал он закрытый. Судьи, обычно организаторы слушают команды, а финал вот он сегодня состоится. У команд будет 10 минут на выступление, представить свое решение, и их оценивают судьи. Повторюсь, что мы любим разные университеты. У нас уже второй год традиционно очень много высшей школы экономики. Ребята очень умные, мы всех любим. У нас много разных университетов среди организаторов, поэтому мы всячески приветствуем, если люди из разных вузов будут к нам приходить, учиться, общаться, проводить нетворк, звать гостей. В общем, мы всячески рады. Стараемся поддерживать, несмотря на то, что многие уехали, стараемся поддерживать контакты с ребятами, которые уехали в Эмираты, в Лондон. Мы поразъехались немного, кто-то там даже в Африку уехал. Мы стараемся поддерживать нетворк. В принципе, это, наверное, все, что хотел бы рассказать. У нас есть разные площадки. Сейчас, я так понимаю, в том числе есть на YouTube. У нас есть группа ВКонтакте. На сайте есть самое важное, что вам нужно знать про наш сайт. Там есть вакансия. много вакансий через нас публикуется. Мы всегда стараемся делать так, чтобы там всегда был прямой контакт mail, либо HR, либо подразделение прямо, которое нанимает. И, соответственно, все вакансии дублируются в Телеграме, важные анонсы там есть в Телеграме. Советую подписаться на наш Телеграм. Последнее, что я хотел бы сделать, естественно, пожелать удачи нашим финалистам и представить судей. Судей у нас сегодня 3. Первый судья – это Максим Автухов. Он является SEO Янга Daily Tech. Вот это как раз его сектор, он в этом хорошо разбирается. Ребята, я бы советовал вам опасаться большого количества вопросов по синергиям именно от Максима. Вторым судьей является Шамиль Гаджаев. Он является вице-президентом в департаменте Private Equity Special Situations ВТБ Капитала. Это один из топовых Private Equity фондов в России. У них много знаковых сделок. И, естественно, нет проблем с капиталом. Соответственно, очень хорошее место для работы. Если не знали, то очень советую обратить внимание на это место. Они очень редко нанимают, но, надеюсь, у них там будут стажеры в этом году. Пробуйте, проходите, я бы вам очень советовал попробовать работать. И, конечно, с нами еще сегодня Олег Лавров. Он является вице-президентом в Private Equity практике Яков и партнеры. Буквально пару слов, если кто-то не знает. Яков и партнеры, по сути, объединили всех консультантов большой тройки после того, как большая тройка официально ушла. Они собрали консультантов McKinsey, BCG, Bain под брендом Яков и партнеры. У них много экспертизы. Они также начали развивать и развивают свою практику Private Equity. Мне кажется, там будет много чего происходить интересного, потому что у них много опыта, много аналитики, много знаний, много экспертизы. Соответственно, поспрашивайте у Олега при возможности тоже, нанимают они, не нанимают, что у них происходит. Мне кажется, очень интересное направление, перспективное. От меня все. Всем удачи финалистам. Матвей, передаю тебе слово.
Да, Игорь, спасибо большое. Теперь, я думаю, после вступительной части мы можем переходить к непосредственно выступлениям команд. И первая у нас команда – это Астон Мартин. Можете начать шерить экран и презентовать.
Принято. Подскажите, как будет видно?
Да, видно.
Видно.
Можешь full screen включить.
Good afternoon, dear colleagues. Today we will present you a solution to an M&A case in the online food delivery market. Next, please. In our presentation, we will cover the following topics. Next. Next. On this slide, you can see members of our Aston Martin team. Next. We propose Uber Technologies to buy Just Eat Takeaway to create a dominant player in the market. The deal takes place on the 30th of June 2023, and the offer price is proposed at the level of $5,091 million. The financing structure includes 100% stock. Next. The online food delivery market is a combination of grocery delivery and meal delivery. It is going to grow with a CAGR of 12% for 2023 to 2027. The key market drivers are busy lifestyle, increasing penetration of smartphones, and increasing purchasing power of youth. The key market trends lay in the field of smart technologies. Market structure is quite similar for Europe, Asia, and North America. Next. Turning from the global food delivery market to two major markets, US and Europe, both predicted to grow at 14% and 12% respectively. The number of users is also growing at 10% rate in both areas. Comparing the two markets, the US market is characterized as consolidated, with three companies completely dominating the market: DoorDash, Uber Eats, and Grab. In contrast, the European market is rather described as partly competitive. Next slide. As for the overview of the key players in the major markets, the top public 5 players are valued at over $1 billion, with DoorDash having market cap of almost $19 billion. It is notable that Jet ranks third in market cap. Revenue for top 4 exceeds $1 billion, growing CAGR of over 30%. However, EBITDA is negative for all companies except HelloFresh. Regarding private players in the US, the most noticeable are Uber Eats with revenue of $11 billion, Eat Street, and Instacart. For Europe, Uber Eats is large, but companies such as Picnic and Order have significant revenues of $455 and $230 million. Hence, overall, the market for both Europe and USA is a promising and rapidly growing one with major players. Next slide.
So Just Eat Takeaway is a leading global online food delivery marketplace with over 622,000 partners in 20 countries. Business model of the company is B2B and B2C business. According to this model, the company derives their revenue from the commissions they charge partners and connects consumers with partners, enabling the consumers to order and pay through apps and websites, and orders to be delivered to the consumers or collected by them in person. Partners are primarily restaurants and other food producers, but also include convenience stores, specialty retailers, and other high street stores. Next slide, please. So, as you can see, key financial indicators are increasing. Adjusted EBITDA improved significantly to 19 million euros positive in 2022 from minus 350 million euros in 2021 after pandemic period, according to the company's report. The company operates with larger scales in the United Kingdom, Ireland, South Europe, and North America. The year 2022 has been a strong year for delivery as company has made further progress in product innovation and data-driven efficiencies. Through innovative use of pooling, allowing a courier to combine multiple orders into one delivery round, the company has improved delivery cost per order by creating more opportunities for pooled orders. The revenue is based on the value of the goods orders through company's platforms and to a less extent from other services such as payment services, sales of merchandise, and packaging. Next slide, please.
There's solid deal rationale for both Jet and Uber. Jet's rationale is built upon the declining opportunities to attract funding, worsening position of the US part of Jet, and the opportunities that M&A offers. The enterprise value of European food tech is decreasing. Moreover, VC funding of food tech decreased dramatically in 2022 by 64%. Only 20% of food tech startups raised capital. Thus, Jet is left with less opportunities to find sources. In Europe, there is an order decline, while the US harsh competition led to the write-down of Grubhub by $3 billion and lower market share. Finally, the value of M&A is rather declining, and it is better to have the deal earlier since Uber Eats is interested and Jet can offer strategic value to it. Next slide, please. As for Uber Eats, it will immediately increase the US market share, become the leader in several European countries, and get access to local partnerships. The US is a highly consolidated market with little or no opportunity to quickly get market share, but an M&A is a quick win, and this deal will increase Uber's presence by 14% in total. Also, the acquisition of Jet will give leadership to cities such as New York, Boston, Chicago, and others. In Europe, Uber will become the leader in multiple markets and become several times larger than the second largest player. Strategically, Uber prioritizes an asset-light model, and this is achievable with the multiple partnerships of Jet with local partners. Next slide, please. Focusing on the US, Uber is particularly interested in expansion of the Uber Eats segment. Recently, deals such as Postmates confirmed this. Also, Uber Eats has previously considered the acquisition of Grubhub, the US part of Jet, yet failed to do so because of Jet acquiring it. Acquiring Grubhub is a quick win solution to expanding in such a consolidated market as the US. Next slide.
We expect huge synergies in terms of revenue growth and cost reduction, as Uber has great expertise in acquisitions and company integration. Present value of the synergy effect will $2 billion, 86% of which will be revenue synergy. As for revenue synergies, we expect ecosystem integration as Uber and Jet can exchange customer databases and create a unique offer. 64% of Uber clients are coming from Uber Eats, thus we expect the same share to come for mobility services. Jet has approximately the same current number of clients. We expect non-Uber taxi users that are Jet clients to start using Uber Taxi. To calculate synergy effect, we multiply taxi services penetration by other taxi companies' market share and conversion ratio. SG&A synergies mostly come from cutting marketing costs such as search engine, app, and affiliate marketing, termination of UEFA sponsorship, and collaboration with celebrities. In addition, we expect Jet to reduce personnel costs for support functions by 80%. for customer service logistics in the North American market by 30% and in Europe by 15%. As for COGS, we see a small effect as the main item couriers is now scarce, and for business growth, we don't recommend their redundancy. We assume that revenue and COGS will fluctuate in line with trip volume boost on the platform. As trips increase, we expect related changes for insurance costs, processing for fees, and collocated data census expenses. At the same time, our dominant position in the market will allow us to reduce labor costs for couriers and increase prices for our services.
If we go on to valuation, we'll start with financials. The length of forecast period is 5 years due to the gradual stabilization of revenue in 2027. Basically, revenue grows with the meal delivery market at 7% annually. At the moment, Jet is in a position of active growth that can be seen as revenue volume and capex growth and negative free cash flow. EBITDA is expected to turn positive in forecast periods, and high marginality allows Jet to generate positive cash flow. If you go on up to DCF analysis, next slide, please. Our main assumption here was original order quantity and average check estimates. With discount rate as of 8%, our enterprise value equals to 4,700 million euros, and using equity breach, we arrive at 3,800 million euros implied equity value. For sensitivity analysis, we calculated enterprise value based on discount rate and long-term growth rate assumptions, resulting in implied equity value varying from 2,600 million euros to 6,200 million euros. If we go up to comparables, as we showed before, a comparable universe is pretty large. However, we decided to stick up with the companies we expect to be the most close peers. And with multiples, we thought that the most precise would be EV revenue and EV EBITDA. For EV revenue, we chose current multiple. However, for EV EBITDA, we decided to go for the forward for 2025. That's forecast on 3 years. We decided to choose exactly 2025 because a lot of companies are still expecting, and even our peers in 2023 expecting a negative EBITDA. In 2024, the multiple might be non-reliable as they are just getting a small positive EBITDA, and in 2025 they will just be stable, be more mature, and estimating weights for 50% for each multiple, we arriving at 5,500 million euros. The next slide for football fields. So basically here we're just giving market approach 50%, for income approach another 50, and the final result is 4,700 million euros. As for valuation date of 31st of March 2023, the premium for current market price as of the date is 22%, and synergies are covering it. So finally, if we go to transaction overview slide, what we're offering Uber to acquire Just Eat Takeaway for 100% stake for 4,700 million euros with implied EV revenue of 0.8. The deal is becoming accretive as Just Eat Takeaway becoming more profitable. As for the structure, is for sure 100% stock, is based on previous transactions that Uber had. They were most of them were either all stock or most of the part was for the stock part, and that with high increasing rates and the need for saving up cash would go for all stock deal. Yep. So basically, that's all we wanted to tell you. Thank you for your attention. We'll be glad to cover your questions related to our analysis.
So we're now about to ask questions, right?
Yep, sure.
The first one, can you repeat why you consider Just Eat an attractive target for Uber to acquire?
Yeah, so there are several reasons, and for Uber, why is it attractive? Next slide. Yeah, so firstly, it is the opportunity to expand in the US very quickly, and the second one is to expand in Europe once again very quickly, and also get access to new partnerships that Jet is very famous for.
And I assume so Grab was continuously losing market share. And why you think it would stop doing so? So I mean, if you check share price performance, it dropped 6 times from peaks. The rest dropped less, 3 to 4 times, and that's all because they are losing market share. And it's basically falling knife. Why you think they would stop, or why you think that we can turn around the asset?
Yeah, so actually, because the competition is very fierce among the largest players, and because of that, Grubhub actually lost a lot of market share. And we believe that when acquired by Uber, we will have to spend less, et cetera, the synergies. So Grubhub, as part of Uber, will be able to increase or at least retain its market share.
Yep, I might just add up that there are a lot of concerns about Just Eat Takeaway management team. They've been making a lot of deals or some business operational decisions.
Do you include the management team in synergies? I mean, reduction.
Maybe in the reduction of SG&A. Anyway, we can see that Uber Eats has much better profitability dynamics. They have proven experience. Yeah, of course, Just Eat Takeaway is also a fully delivery company, but however, the results differ a lot, and we believe that Uber, by acquiring Grubhub in USA, will just take up and speed up the situation based on their strategic decisions.
Got one last question, if I may. From the synergies you outlined, what is the biggest and I don't know with highest probability to achieve?
I will just start if my teammates can add up. So just the basic idea here is we have synergies, revenue synergies we calculated are for the ecosystem. So they are for Uber Taxi by acquiring client base, because we can see the statistics, how many Uber Eats users are using Uber. And basically the idea that currently in the market right now, the delivery companies are expanding their revenue. However, this expansion is more extensive, not intensive. That is why they just keep on generating more losses. So we think that for synergies in the delivery segment, it is better to look at the cost to turn companies more profitable, as many investors are pointing on the future of the market. So the revenue is for the ecosystem, COGS is for delivery, and SG&A is for the whole business. And we expect these synergies to be implied because Uber has a proven history of a lot of M&A deals, and they are just increasing their value. In total, if we just include the past year macroeconomic shock. So yeah, we just expect the strategic decisions from management team.
Thank you.
Hey guys, many thanks for the presentation. So it would be great if you can elaborate a bit more on how did you calculate revenue synergies, and whether you have taken into account overlap in client base. So I would presume that many of Just Eat clients, they are already using Uber taxi.
Okay, if going up to next slide. Okay, so we split up the market into Europe and USA because they have like various taxi service penetration. So we just needed people, clients that use taxi. Answering your second part about Uber clients, we looked at the market share of Uber, and like for US, Lyft is like taking up for 29% of the market. So like we can expect that these customers in total, statistically, 29% of customers in US would not be using Uber, and we just expect them to come and join our ecosystem. And we can dive more deeper into clients, split up, check on their like number of orders and all that stuff, but there will be just more and more assumptions. So we decided for even the probability of the synergy, decided to just like a median conversion ratio of 0.5 just to cut up the synergy. And so basically the idea is like this. Maybe if there'll be more like details from Uber's management, just be more precise, but logic is like this.
So basically, if please correct me if I'm wrong. So you assumed that you would be able to acquire 50% of other taxi companies' market share post the deal.
So basically here we use this conversion ratio, especially for all these assumptions, because not all the clients would be joining our platform, joining Uber Eats, and moreover, we're just assuming the clients that are using Just Eat Takeaway, because like the penetration of food delivery is not like just 100%. Not all the users are using taxi, and of course some other clients that are using Amazon delivery or other stuff are not considered in this share, and they also might be using taxi, so they're not joining us, and we're not acquiring all other taxi markets.
Well,
the idea just to take clients of Just Eat that use non-Uber taxi. And,
okay. And sorry, and how did you calculate the share of? Okay, so you assumed the share of Just Eat clients not using Uber is exactly same as share in total market, right?
Yeah, because we split up to Europe and USA, and we just expect on the big numbers, because the company is also big, we just expect that it will be like statistically close up.
Okay, clear. And regarding cost synergies, yeah, would be also good if you could provide more color on. I think like the most interesting part is how have you estimated reduction in delivery cost? Because we would assume that a high base of couriers would allow the company to decrease delivery time and cost of delivery.
So I think basically here, when we speak about COGS synergy, we speak about couriers and their salary, but also 1 minute, please. On the last slide, 1 minute. We have like small synergies that we can't quantify. It's what you're speaking about. It's improved our operational efficiency, reduction in delivery costs, and so on. So in our model, we didn't put these assumptions. We just know that maybe these synergies will be more, and we expect them, but we couldn't calculate them.
Okay. And sorry, last question from my side. I noticed that Just Eat had negative EBITDA margin in 2022, I think. So you expect the margin to improve, starting from the next year. Does this assumption is it based on the idea that Uber would be able to make some turnaround post the deal?
Sorry, could you please specify the last comment? So
yeah, so just if I can say it simpler, basically, why EBITDA margin of Just Eat, why it's going to improve in 2023, and why it declined in 2022.
Okay, so here we just have basically like 2023, yep, increase. Here we just have basically like management estimates, and there are like a lot of assumptions on how they did calculate adjusted EBITDA, and we decided just present it here and not to like stick up for our model, because these assumptions also need to be proven. And answering your question based on just why that will just grow up, we expect to increase because of the size effect, as company will be generating more profit than a loss on an order. That will be just on the size, on the number of orders we are covering it. So just to deliver one order, they, for example, require like 1 unit to spend, and for delivering 2, they will just not need to spend for 2 units. They will just need to spend like 1.9, and with increasing with market penetration, market growth up 7%, and with all that, their gross profit will be covering lower costs that just mostly bring the company just negative operational results. So better gross profit profitability will be covering these expenses.
Okay.
Yeah, thank you very much, Tim. I have a couple of questions regarding, I think, valuation in this part of your presentation. As far as I understand, the company is public. What premium to current share price would you like to propose to shareholders?
22%.
And have you checked share price performance for the last year or 3 years?
Yeah, we didn't bring up it to the slides, so just can point out that there is some specific for sure for Just Eat, because like Grubhub impaired greatly. However, mostly all of the market has fallen, except like, yes, for sure, Uber has like better results here, and but the company is like much bigger and management a bit better. However, we can assume that all the market is falling. That is why the company is also falling. However, like that was the valuation was for 31st of March, and if we just will slide up to the next month for current dates, they're just stabilizing. So yeah, we've checked, and we can expect that anyway. That would be like premium.
Okay, thank you. And which group of shareholders do you represent? I see that like you have a broad shareholder structure, and I just want to understand that if you propose like a premium to current share price, but as I understand, it will propose a significant discount to share price in terms of the 2-3 years perspective. And some of the shareholders entered the company far long ago, and the big risk is that they will not vote for this transaction with such small premium to current share price, because it will represent a huge discount to previous trading level.
Sure, thank you for making the question more clear. Basically, that's more like institutional investors, more like for private equity funds, because during the year there have been a lot of meetings, and at these meetings representatives of the funds were just saying that they are not approving what management is doing with with these deals. They are pretty upset with the Grubhub and just willing to sell it faster. So yeah, that is the group that is interested in just gaining as much as they can from the deal.
Mm-hmm. And what is the multiple for the merger of Just Eat and Takeaway? Is it higher to current multiple or lower? Or you haven't checked or do this analysis?
Yeah. And
I just wanted to realize that a couple of years ago there were merger, and all of almost the same guys were at the board of directors meetings, and they vote for the merger at some multiple. And here you just propose to sell them, and it will be quite confident to look at the low multiple for them, I suppose. No, is it wrong? Or?
Okay, sure. I got a question, and I think for at the moment it will not be possible to specify the exact multiple for the period, because like the deals were at different various different time, and just to mention that the shareholders that took agreement on these mergers, even though some of them that are just saying and wishing to sell now were not happy with that deals. And yeah, it might seem that they might be losing from entering into the market, into the company share. Anyway, as I got their message based on the letters on the company's website, they just maybe lost belief in the effect on in the US market, and there are some kind of losing shares in UK or France, and they just agreed to lose the money maybe, but it would be better to exit now, as than just the company could get worse, and for example, Grubhub share in US might get less. So yeah, that's what the point I get from them.
Okay, thank you very much. And the last question, I think, regarding this slide, you propose to look at the revenue, as I understand, like actual revenue for 2022. Am I right? Or it's like a forecast? Or...
No, the revenue is current. The revenue is current. The multiple EBITDA is forward. We decided to look at the current multiple because we just wanted to see, like, depending on the concerns, like what is the situation just now in the market, because it might be hard to predict with increasing inflation what would be in 2023, and that's without assumptions. So just like a current point, that's what we're having. And just for EBITDA, it's like for 3 years, and a lot of macroeconomic shocks would be their effect would be passed. So that's the idea.
And why do you use EBITDA 2025?
Because a lot of even our peers are in 2022 and 2023, they are operationally negative, and in 2024 they will be just getting their EBITDA, and it will be just positive, so it will be just like in a small amount, and that will just vary the multiple. So we just want stable EBITDA, and they will be in 2025, and we expect that not to be that far. It's just like 3 years, and their multiples are pretty stable, we expect.
Mm-hmm. And you propose like around 12 times.
Alex, sorry for interrupting. The time for the last question.
Okay. Yes, this is the last. I just want to realize that you propose like a EBITDA around 11 times, but as of now for Uber we have only 6, like 2 times higher than our multiple in terms of EBITDA.
EBITDA 11, yep. And sorry, could you please repeat what
and as I understand, we are from Uber, and we will have like a 6 times EBITDA, and you propose to buy you at 11 times.
Can you go to the next slide? No, next slide, please. So if we have like 9.3 multiple, and for the market 11.
Mm-hmm. Okay, and for Uber 6.
Oh, so you mean the multiple for Uber? Yeah, you mean it is lower?
Yeah, I just want to compare our multiple as we represent Uber, and you represent Just Eat,
okay.
And you propose to have 50% higher multiple than we have in 2022. Yeah.
Yep, sure. I got a point. Basically, we can just mention that Just Eat is at the point we did not provide the revenue growth. However, we expect Just Eat to have higher growth rates than Uber. That's why it might be the multiple might be higher because of the prospects of the company that we might follow if we might get if we follow estimates from Bloomberg or GPM. So
okay.
That might be.
Okay. Thank you very much.
Thank you.
Matvey, the floor is yours.
Yeah, thank you, team. So the next team, Marusia, please get ready, and let's give the judges a couple of minutes. So judges, once you're ready, please just signal and the team will be able to start.
Thank you for your time.
Thank you.
I'm ready.
Yeah, good to go.
Hello, do you hear us?
Yep.
Put it in present mode. Okay, thank you so much. Good afternoon, dear colleagues. We would like to present a fundraising strategy for Just Eat Takeaway. To solve the problem of Just Eat's funding in the future, we propose a 100% acquisition of its authorized capital by Ahold Delhaize, one of the largest food retail groups in the US and Europe. For Just Eat, the deal implies product diversification, which includes grocery, and customer base extension. For Ahold, it's delivery services development and opportunity to partner with restaurants. The NPV of synergies is estimated at 3.3 billion euros. Looking into the food tech market, it is expected to reach over $300 billion by 2027, with agriculture and delivery attracting most investments, while delivery being the biggest segment by market cap of almost $170 billion. Most mature innovations concern farming and new retail, which is basically integrated grocery and delivery. Globally, 67% of food tech investments go into food delivery. Online food delivery market is expected to double by 2027, grocery delivery comprising the bigger share of the growth. High overlap of pure players raises competition in Europe and the US. Thus, shifting towards a fully integrated business model is key to market share gains. Many try to achieve it by partnerships with supermarkets and grocery generally.
Now look at Just Eat overview. Just Eat Takeaway is an online food delivery marketplace which operates in 20 markets divided into 4 main regions, with the US and Northern Europe being primary markets. At the US market, Just Eat has 12% share, and at the European market, 30% share. Looking at the right part of the slide, you can see that gross transactional value increased in 32% since 2020, reaching 28 billion euros in 2022. Moreover, number of orders increased by 20% since 2020, where North America and Northern Europe account for most part.
Now let us move to choosing M&A strategy and potential acquirers. Horizontal integration with food delivery companies seem to be risky considering the unstable macro situation and industry specifics, where most of the companies are unprofitable and might suffer financial problems themselves. At the same time, integration with the grocery retail company and entering grocery market would shift the company order and delivery business model to the fully integrated one. Product diversification and technologies integration would create new vertical competitive advantages for Just Eat. Our perfect candidate for the deal must be a leading grocery retail company operating primarily in the US and Europe. It should be financially stable and willing to create or develop their own delivery services. As you can see, Ahold Delhaize is the most appropriate company from the screening leaders presented on the slide.
So let us proceed. Ahold is the world's leader in food retail, which operates in the US and Europe and showing solid financial performance. Talking about Ahold's business model, it starts with fresh produce straight from the farms. The product line is designed by Ahold's own brand aimed at affordable prices and the consumer packaged goods from other retailers. As with about 8,000 stores, Ahold is a very favorable platform. Is featured by technological warehouses and ability for fast distribution. And lastly, the goods are sold through both offline and online stores. We're moving on to the synergies we expect as a result of the deal. Revenue effects will appear by increasing sales and expanding geographic presence for both of the companies. Cost effects will be created by reducing staff and marketing expenses. Strategic advantages include new distribution channels for Ahold, such as cafes and restaurants. As for Just Eat, it will be the diversification, as opportunity for grocery delivery is open now.
Integration of Just Eat and Ahold business models will create add value effects for both companies and their customers. Companies would benefit from product diversification and customer base extension. Moreover, Just Eat restaurant partners could cooperate with Ahold farms and suppliers partners to reduce costs. Ahold could also promote their own brand products to Just Eat restaurant partners. However, the expansion of the customer base and the increase in delivery traffic can slow down the process of buying products offline. To address this risk, we propose to install dark stores to optimize the home delivery process. Both companies are among top 5 leaders in the markets of the US, Belgium, and the Netherlands, so their cooperation will undoubtedly strengthen their leading positions there. Moreover, Ahold infrastructure in Portugal, Czech Republic, Greece, Romania, and Serbia, and Just Eat existing partnerships with restaurant chains in these countries would help Just Eat to extend its geography of operations. Implementation of dark stores on Just Eat's markets, such as France, Italy, Germany, and others, can extend Ahold geography of operations as well and drive its operational efficiency on the existing markets.
Many synergies are likely to be obtained as a result of Ahold's desire to develop product delivery and Just Eat's broad expertise in this area. We evaluated revenue synergies for America and Europe separately. For Europe, the start of grocery delivery by Just Eat, as well as a gradual entry into new European countries, will ensure a targeted revenue growth rate for Ahold. For the US, Grubhub's leading position will also ensure revenue growth for grocery delivery and strengthen Ahold's position in the market. There are also additional costs associated with grocery market entrance of Just Eat. For For the organic development of Just Eat in the grocery market, it's also planned to open dark stores. In 2023, it's planned to open 146 dark stores. By 2032, the number of dark stores will increase to 1,040. Discounted costs for operating and maintaining dark stores will amount to 360 million euro. The cost reduction will be implemented by reducing staff costs and other operating expenses such as marketing. Finally, we got NPV of total synergies net of acquisition costs equal to 3.3 billion euro, which is higher than premium paid. Let us proceed with deal financing. It's planned that Ahold will buy 100% of Just Eat's equity with a 35% premium to the last closing price of Just Eat's stock on the 31st of December 2022. For financing, we propose to use 50% of cash and 50% of debt. The debt burden of Ahold will increase, but it still will be lower than for comparable companies. The accretion to pre-merger Ahold's earnings per share vary from 9 to 23%. Net synergies cover about 26% of equity value.
Now let's look at the valuation block. According to DCF valuation results, Just Eat's enterprise value is 4.4 billion euros, equity value is about 4 billion euros, and share price is 19 euro. According to our calculation, WACC is 10.7%. Now let's move on to market valuation approaches. Using trading multiple valuation approach, we found that Just Eat's enterprise value can vary from 3.4 to 18 billion euros. And using transactional multiples approach, we derived that Just Eat's enterprise value can vary from 3.3 to 8.8 billion euros.
This slide presents the valuation summary. Vertical lines display market and offer price of Just Eat, enterprise value, and equity value. Analysis of Just Eat's share performance doesn't seem... Can you please proceed with the slide? Analysis of Just Eat share performance doesn't seem to be optimistic. Just Eat shares are losing significantly in the price and are at the historical low, which means that investors are still concerned about Just Eat profitability perspectives. That's why a deal with Ahold is a great opportunity for Just Eat shareholders, which brings 40% premium to the share price estimated by DCF and 35% premium for the market share price. Thank you for your attention. We will be happy to answer your questions.
Who want to be first? Oleg? Emil?
Yes.
I can do it, but up to you.
Okay, then I can start. Thank you guys, very nice presentation, really like the style. So you expect the total synergies to be 3.3 billion, right? And premium paid is 1.6 billion. So basically that means that you suggest to share the synergies equally, right, between us as shareholders of Ahold and shareholders of Just Eat. Is that right?
Can I answer in Russian?
Короче, синергии...
Can I answer in Russian? I understood the question.
Yeah, sure.
Почему именно пополам? Ну,
да.
Так получилось расчетно, мы считаем, что это справедливо, потому что мы, акционеры Just Eat не планируют просто продать Just Eat, мы решаем проблему его финансирования, и все-таки хочется, чтобы он продолжал дальше свою деятельность, даже в рамках другой компании. Поэтому в рамках данной сделки здесь плюсы получает и Ahold с точки зрения получения готового бизнеса по доставке, который будет оперировать, и Just Eat, который получает финансирование для развития дарксторов, тех же самых, и проникновения на новые рынки, развитие гроссери доставки. Поэтому...
Окей. А вот интересно, у вас есть разбивка синергий по элементам?
Ну вот у нас есть выручка, отдельно косты, и
То
в
есть
целом мы больше не выделяли.
основное это выручка, правильно?
Да.
И получается, это выручка, то есть это какое предположение, что на базе магазинов Ahold, да, курьеры Just Eat будут доставлять заказы. Правильно?
Частично на базе магазинов и в тех регионах, для начала, в которых уже есть Just Eat, также мы планируем, предлагаем открыть дарксторы, чтобы немножко... У Ahold очень разные по формату магазины, есть очень большие, у него есть свои склады. Вот, но есть также и маленькие магазины, и в тех магазинах, которые маленькие, так как это может вызвать отток офлайн клиентов из-за того, что будут очереди из курьеров, мы также предлагаем открыть дарксторы, но изначально это привязываем именно к тем регионам, в которых уже работает Just Eat.
Окей, понятно.
Можно на слайде с бизнес-интеграцией тоже посмотреть подробнее, как это хотим реализовывать.
Окей, тут без бутылки не разберешься так сразу. Ладно, а вот еще такой вопрос интересно. То есть сейчас Just Eat – это marketplace, да, у которого вообще различное число разных вендоров, да, которых он обслуживает. То есть это и рестораны, как бы фуд-ритейла у него нету, да. А вот когда он будет приобретен Ahold, то не будет ли тут определенной как бы каннибализации, то, что Just Eat будет работать в интересах Ahold, и как бы другие вендоры начнут отваливаться по чуть-чуть?
Спасибо за вопрос. Возможно, будет какой-то процент каннибализации, но очень незначительный, потому что Ahold, то есть Ahold сохраняет свою бизнес-модель и очень удачно устраивается бизнес-модель Just Eat в бизнес-модель Ahold. То есть Just Eat специализируется на доставке готовой еды из ресторанов. То есть у них нет своих ресторанов, у них нет своих точек и так далее. И они, грубо говоря, продолжают реализовывать эту же бизнес-модель в рамках Ahold. Плюс они оптимизируют доставку Ahold из дарксторов, из магазинов, то есть просто расширяют свою сеть доставок, при этом сохраняя всю свою партнерскую сеть, вот, и также предоставляя преимущества от своих партнерств Ahold, тоже их поставщикам, их фермам и так далее.
Окей. Последний вопрос. А почему как бы лучше купить Just Eat, а не потратить эти деньги на усиление своей собственной доставки? Я, насколько понял, там у Ahold она есть в каком-то там полузачаточном или уже развитом виде.
У нас, к сожалению, какие-то неполадки со звуком, не слышали последний вопрос.
Да, могу повторить. Сейчас нормально слышно?
Да.
Да, то есть вот у нас, как у акционеров Ahold, то есть есть выбор или купить Just Eat, да, там, заплатив какую-то там часть денег за бизнес по доставке, за непрофильный для нас бизнес, да, по доставке готовых блюд из ресторанов, да, это вот как бы одна опция. А вторая опция – это вот взять эти же деньги и проинвестировать их как там капекс в развитие собственного канала курьеров. Вот почему для нас лучше покупать Just Eat?
Да, почему лучше? Ahold действительно хочет свою доставку развивать, вот, Однако они уже партнерятся с Ahold, с Just Eat и другими компаниями по доставке, и было бы очень удобнее просто перенять инфраструктуру Just Eat, потому что они уже вместе работают, их в целом все устраивает, и вместо того, чтобы тратить средства на поиск штата, на анализирование, интегрирование какой-то своей технологии, можно просто перенять опыт Just Eat. То есть это просто быстрее, это удобнее, и компания в целом достаточно хорошо развивается, они оперируют на схожих рынках. В этом плане все очень удобно, нет никаких рисков в этом плане. Поэтому просто они сэкономят время и деньги на то, чтобы самостоятельно это все собрать. Могут просто уже взять готовую компанию. И также, в свою очередь, Just Eat планирует выход на рынок гроссери. Это в целом тоже закономерная история для компаний, которые специализируются чисто на доставке, поэтому они тоже получают свой бенефит в виде выхода на новый рынок за счет инфраструктуры Ахольда.
Тут еще можно добавить, что при текущей вообще макроситуации и при текущем финансовом положении Just Eat у менеджмента не будет много сил и аргументов, чтобы слишком большую премию запрашивать. Поэтому по текущей оценке, скорее всего, это достаточно рациональная сделка будет.
Да, спасибо.
Спасибо большое за презентацию. Пару вопросов, если можно. Вы говорите, из того, что я понял, главный рационал для Хольда – это увеличивать онлайн-продажи.
Да, они планируют переводить свою выручку в онлайн.
Да. Зачем, какая вот генеральная в этом идея? Почему они это делают?
Почему они развивают онлайн-канал?
Да.
Опять же, чтобы сократить расходы на аренду, персонал, то есть это достаточно выгодная история, когда люди закупаются онлайн, то есть в любом бизнесе онлайн более такой рентабельный канал, соответственно, это такой общий тренд по рынку, это не чистая история Хольда, это просто все магазины хотят развивать онлайн-канал, при этом их офлайн-канал подразумевается, что не будет особо сильно тоже страдать. Вот, просто плюс они предоставляют удобные сервисы для того, чтобы люди могли дополнительно из дома что-то заказывать и хотят развивать доставку до дома тоже.
Я бы хотела добавить, что это скорее как именно, если есть спрос, то вот они его реализуют.
У меня просто, некоторые с этим проблемы, потому что, кейс, который вы предлагаете, купить Just Eat, чтобы потом делать Dark Store, это очень много денег, чтобы отрастить онлайн-канал. Нужно потратить. То есть не только, не знаю, премию, да, но нужно за весь Just Eat заплатить, чтобы получить какой-то эффект, на свой онлайн-канал. И из того, что я чувствую, это типа не очень соразмерная величина. Потому что за Just Eat нужно заплатить там типа 6 миллиардов, 5 миллиардов. А вот синергии, даже если 100% все реализуем, типа будет только 3 миллиарда.
На самом деле синергии у нас получились достаточно большие, именно почему мы решили пойти дальше и развить идею с дарксторами, потому что можем себе позволить, так сказать. Поэтому выгоды на самом деле много, потому что бизнес Just Eat – это не только доставка, но и большая партнерская сеть с ресторанами. И так удачно получается, что у Хольда есть партнерство с поставщиками, плюс партнерство с фермами, то есть они специализируются как раз-таки на поставке продуктов, они развивают свой также бренд и могли бы очень выгодно для себя использовать вот эти партнерские связи Just Eat тоже для того, чтобы сократить какие-то добавочную стоимость между приобретением, закупкой продуктов. Вот, мы тоже рассчитываем, что от этого будет value для компании.
Ну и как поставлять в
наверное, да. Да, мнение понятно. Я бы думал, что после этого не надо покупать. Ты можешь прийти и договориться. Если хочешь премиальный селекшн на платформе типа Just Eat, ты просто платишь деньги и хочешь делать свои Dark Store. И в целом Dark Store в развитом мире сейчас типа не очень модная тема, потому что очень сложная юнит-экономика. И ни один ритейлер, посмотрев на Getir и Gorillaz, как бы очень осторожно к ним относится. Ладно.
Я могу тут добавить, что мы
Да.
ориентировались на кейс Вкусвилла, когда они тоже начали развивать доставку, и у них начались проблемы с офлайн продажами, сократился темп, вот, и подумали, что,
Это все
возможно,
очень понятно,
можно
да.
нивелировать
Мгм.
нашу...
Мгм. Да, вы просто, ну, короче, что мне
Да,
кажется, это то, что вы говорите, абсолютно не имеет смысла, после этого не надо платить много миллиардов долларов. Но это окей. И для меня, в общем, вот этот рационал, он не очевиден. Зачем это нужно, и почему это столько стоит? У
хорошо,
меня больше
понятно.
вопрос.
Yeah. English or Russian?
As you wish.
Okay, let's switch to English in this case. Can you please explain on the page 18 value creation? What is positive values and negative values, and why these amounts are so big?
Well,
Like
we estimated regarding to this graph, we estimated it's like we discounted our revenue synergies and cost synergies. Firstly, we take a standalone enterprise value of Just Eat, which we got from the DCF valuation. We discounted revenue and cost synergies, also additional costs related to dark stores. Then we got synergized enterprise value. After we subtract acquisition costs and interest after tax, because a hold will need to pay interest on the debt. And then we just got the equity value net of synergy, like from Just Eat with synergies.
Okay, okay, thank you. Regarding share price performance, on page 23, you have like a historical graph, and you mentioned that the share price declined more than 80%. What is the logic behind this transaction for the shareholders of Just Eat, despite all the facts that like a poor capital allocation and what is mentioned on this slide? I just want to realize whether all shareholders and all stakeholders of Just Eat right now will vote for this transaction, because it will provide a significant value reduction of the portfolio company, despite the fact that it provides like a premium to current level. Maybe for them will be more beneficial to wait additional years to wait until the share price increase. How do you see this situation?
Thank you for the question. We see it the way that investors do not really believe in expectations of positive revenue this year, because analysts forecast strong returns and so on. However, the share price continues to decline, and you can see that there was sharp decline due to some reasons. And we think that investors are not positive about the future profitability of the company, and they do not react on positive news, which means that they are stably not sure. And that is why we think that they will agree on this deal, because it seems to be quite a promising investing opportunity.
And I also would like to add that that's why we propose a premium not to the share price which we estimated by DCF, but for the share price, for the market share price.
But it's around the same number. You suppose that the fair price for DCF is 19, and the current share price is like around 15. Okay. And have you considered other options? Maybe some additional cash in the company around 1 or 2 billions will help the situation and will be more beneficial?
Speaking about share price, current share price, we think that the share price, the company is even overestimated on the market currently, because according to our DCF analysis, the share price is even lower. And if the market understands it, it can be like a signal for further decline. Yes.
And regarding to your question about cash-in, this may be helpful, but we actually not sure for how long it will help, because Just Eat had a problem not just in, for example, 2022 or 2021. It's quite a long time they have negative numbers of EBITDA and so on, and even gross profit. Actually, because of higher costs. That's why we think that it's more like not chronicle, but like maybe problems with management or something like that. That's why it can be like a pill for a very short period of time.
Mm-hmm. And maybe in this case, does it make sense to change the management and to look in this way? Okay, and in terms of the precedent transactions, you mentioned also some valuation range on this one. And have you checked the multiples which were at the Just Eat and Takeaway acquisition? Current multiple is higher or lower?
We actually tried to check, but unfortunately we didn't find the numbers. We checked Econ Refinitiv database and Capital IQ, but there were no information. That's why, unfortunately, no.
Mm-hmm. Okay. And in terms of the football field and multiples, why are you looking only on revenue multiples, not for gross profit or EBITDA?
We looked only on revenue. Sash, can you switch to football field? Thank you. We looked only on revenue multiples because in 2022, Just Eat has negative numbers of gross profit and EBITDA. That's why we can't implement multiples of EV gross profit and EV EBITDA in our valuation. And also Just Eat peers, they almost all have negative numbers of EBITDA. That's why it's not sufficient to do this.
Okay. Thank you very much.
Thank you.
Yeah, thanks a lot, team. I think there is no other question from the judges' side. So thank you for the presentation.
Thank you.
Thank you. Thank you.
I guess now we can move on to Todorosa team. So please, the floor is yours.
So can we start? Matvey?
Yes, please.
Okay. Hello, colleagues. Today we are going to present to you potential acquisition of Just Eat Takeaway by Delivery Hero. So, okay. Here is our team Todorosa. So, we recommend Delivery Hero to buy a 100% stake in Just Eat Takeaway. In valuation, we used several approaches as DCF, comparable companies, and precedent transactions. Overall, we recommend to finance deal as 80% stock and 20% cash. Deal rationale include creating one of the largest food delivery companies in the world that will generate a lot of revenue and cost synergies, about which we'll tell you later.
Now we tell you about market overview. As you can see on the slide, food delivery market is developing fast and demonstrating strong revenue and user growth. Food tech market in particular is the main focus of delivery companies, as it will grow more than 7 times compared to usual platform delivery. Next slide. As you can see on the picture, food tech penetration isn't high, but market looks promising in terms of growth. Also, UK, Germany, and Spain are the most promising European markets in terms of market size and maturity. Next slide, please. As company businesses landscape, we want to say that Just Eat in particular holds the largest market shares in key European countries such as UK and Germany, and shows higher results in partners, users, and gross transaction value. Now we can tell you about company profile.
Yeah, thank you, Denise. Just Eat is a global online food delivery marketplace that operates in more than 20 countries and connect consumers and restaurants through platform. It is leading player in key global markets with high operational and financial performance. And Just Eat offers 2 primary models of fulfillment, delivery, and marketplace only. And its business model works productively, turning its unit economics into profitability, as adjusted EBITDA became positive in 2022.
Now we'll talk about valuation. The slide shows results of DCF. First, based on GMV and take rate, we forecasted revenue. And based on orders and average courier salary growth, we calculated cost of goods sold or orders fulfillment costs. And we calculated WACC that equals 10.4%. And capital structure consists of around 90% of equity and 10% of debt. And finally, we calculated EV, enterprise value. It's around 4 billion euros. Equity value is around 3.8 billion euros.
And based on comparable companies approach, we selected certain competitors. And we've got median port multiply EV to GTV is 0.3, and EV to revenue multiple is 3.2. And for conclusion, we used only these 2 calculations because EBITDA of this company, so this industry, is often negative. And we also used a preceding transactions approach. So we looked into food delivery and e-grocery deals in the United States and Western Europe in the last 2 years. And based on our calculation, EV to revenue multiple median is 2.5. So now we can move on to the football field.
Okay, this slide shows results of all valuation approaches. We also added valuation based on the share price performance in the last 52 weeks. The final assessment of equity value, taking into account all approaches, is 3.7 billion euros. Estimated share price is 70.1 euro. So thus, we can conclude that Just Eat takeaway is slightly fundamentally undervalued, which makes the deal more attractive.
Now, speaking of deal rationale, the slide outlines potential synergies, illustrative examples of how they can be implemented, and financial impact. We identified revenue synergies such as advertising fees, bargain power, and network effect. Among cost synergies are reduction of SG&A and R&D costs and more efficient platform utilization. Other potential synergies include opportunity to more efficiently develop e-grocery, interest cost synergy, that means the ability to decrease the cost of debt, and multiple expansion. In next slides, we will elaborate on each synergy.
Okay, let's start with revenue synergies. So first one is advertising fees. Delivery Hero offers cutting-edge advertising technology that can be implemented on Jet platform. Delivery Hero, as you can see on the left side of the slide, is currently has around 2% of advertising revenue. As as a percentage of GMV or GTV, while Just Eat Takeaway has only 0.9%, and using Delivery Hero advanced advertising solutions, combined company, Delivery Hero and Just Eat, can ultimately reach around 4% of advertising revenue share, and the NPV of net present value of this synergy will be around 668 million euros.
Okay, next synergies are strong bargain power and network effect. Strong brand and large market positions will give the company more bargain power to command higher fees from restaurants and customers. And the NPV of the synergy is around 400 million euros. Speaking of network effect, it implies the strength of two well-known brands that will create more loyalty among users, and that will affect the number of orders, users, partners, and increase GMV. And the NPV of this synergy is around 80 million euros.
Okay, now the cost synergies. The biggest one, in overlapping countries, the combined company can spend less money on SG&A by eliminating redundant functions in marketing, branding, stuff like legal, HR, accounting, and so on. So by eliminating redundant positions, the NPV of this synergy is around, it will be around 1 billion euros, including marketing costs. It, of course, can be decreased in the same regions.
And R&D cost synergy implies that through uniting two technologically advanced companies, it will be possible to make R&D expenses even more efficient. And following the deal, the companies will merge its R&D know-hows and create more efficient development teams. So based on previous deal in similar industry, we came to the conclusion that NPV of R&D costs reduction is 276 million euros.
Next, we tell about unified platform synergy that includes reducing IT costs since it will have a single window for receiving orders from restaurants to couriers. This will increase the more efficient utilization of couriers, and there will fewer couriers to deliver the same of orders. Consequently, this leads to reduction of order fulfillment costs. The net present value of this synergy is 622 million euros. Next slide. According to statistics, some about potential synergies, multiple expansion synergy implies that larger companies usually have higher multiples. So managers can acquire smaller companies relatively cheaper and generate returns to their investors. Multiple expansion synergy leads to Delivery Hero trading with the premium, and so creating more value for shareholders. There's also potential to develop grocery, since Jet provides advanced logistics in key European markets, and Delivery Hero is well experienced in grocery business with 1,200 dark stores. Next, about deal analysis.
Sum up a little bit, the deal will be financed through stock and cash. We looked into Delivery Hero debt burden and compared it to similar companies. And we can see that the Delivery Hero has a high debt burden, which limits the ability to raise debt, financing to acquire Just Eat. Nevertheless, there is an opportunity to finance part of the deal through cash, since Delivery Hero has a lot of cash on its balance, and compared to other similar companies, Delivery Hero share of cash from revenue is much higher. Consequently, companies don't need that much cash to conduct operational activities, so the company can allocate part of cash to finance the deal. The reduction of cash can increase net debt EBITDA multiple. We will allocate only part of cash to comply with possible covenants. The rest of the deal will be financed with stock. Delivery Hero will acquire 100% of Just Eat equity, and final acquisition share price will be 22.2 euros, and purchase equity value is purchase equity value is 4.8 billion euros. The current share price is 17.1 euro. Intrinsic value, according to DCF, is 17.4 euro, but we suggest 30% premium to current share price and offer around 22.2 euro for each share. We pay this premium and offer our price based on the potential synergetic effect. Share of synergies of Delivery Hero is 67%, and of Just Eat Takeaway 33%. Since part of the deal is funded by cash, and Just Eat Takeaway shareholders will receive money in the moment, and they have less risks. It's not less risks because of the realization of synergies later on. Thank you for your attention.
Okay, if you have any questions, so we'll be glad to answer.
Okay, I can be the first. Thank you very much for the presentation. I get just a few questions about the synergies. So can you highlight risks associated with the execution of synergies?
Yeah, of course. Shall I open? We covered a number of risks here. It's probably miscalculating some of their synergies. We shouldn't have our hopes much, that high. Also, there might be some integration issues regarding culture and regarding integrating IT technology systems and other systems. There might be some issue there. Then some other problems might include overpayment for the target company or some unexpected costs that might come up. Also, we consider some probable regulatory and legal risks, which cannot be that much mitigated, but we should keep updated, look at market trends.
How do you propose to mitigate them with maybe deal structure or?
Sorry, I say.
So there are certain risks.
Okay.
And it's about predicting future. And a lot of synergies compared to the price you pay, you suggest to pay. Is there any recommendation how this can be mitigated? Like this risk can be managed?
Okay, thank you for the question. Okay, so the answer is following. When we calculating the synergies, we knew that there would be several risks that can affect on potential success of implementing synergies. So that's why we decided to be more conservative and use the most negative scenario calculating the synergy effect. Actually, if you want us to answer more specific regarding risks, so we know that there are several specific risks. For example, can you open, Ksyusha, the slide with bargain power? We know that the company cannot easily, for example, easily increase the take rate. Of course, we understand it because there are several government departments that can stop company, and that's why we decided to be more conservative and took into account the most negative scenario calculating the synergy.
Okay, thank you. Got no questions.
Other questions, guys?
Shamin, would you like?
Huh?
I'm still thinking about questions.
Okay.
If you have some in your mind, please.
Yeah. Could you please? I have also the questions regarding valuation. Could you please kindly open the slide with DCF?
Oh, okay, DCF.
You have risk-free rate 3.5%, and how do you derive this amount?
Actually, we estimated it using UK bonds. I guess UK 10 years or 20 years bonds. Actually 10 years, yes. UK bonds. It's the yield of maturity. Yield of maturity of this bond.
Okay, I just wanted that. I just trying to remind myself what is the Fed Reserve interest rate. I think it's like around 5%. And what will be the implication to the DCF if the risk-free rate will increase about 2% in the current market with the increasing, constantly hiking
Okay,
interest
what?
rates?
So again, sorry, what the question was, what will be with the share price if risk-free rate, or with the value if risk-free rate increases? Yes.
Not share price, like your valuation proposal.
Our valuation proposal, of course, our valuation proposal will decrease. The offer price will decrease, of course, because of the cost of fund raised, or the cost of the discount rate will increase. But we hope that the synergies that potentially can be implemented can be higher than this risk, that in order to decrease the risks, our risks as shareholders, the Delivery Hero shareholders, to lose money going to this transaction. I don't know if I answered your question, not, but
yeah, okay, it's enough. Thank you very much. And the other question is regarding also valuation. You mentioned that Delivery Hero might be interested in this one, but have you checked whether Delivery Hero has a balance sheet for this acquisition? Also, I saw a new slide regarding a transaction structure. Can you please open it?
Okay.
Which slide is it?
Transaction structure. Next slide. The last one. Next slide.
Transactions. Yeah.
Next slide. Yes. The last. Okay. Further?
Because as I remember,
move on. Yes.
You propose.
What?
I think one where you
like
have leverage of the company compared to
Okay,
industry
move on.
peers.
Yes. Okay. Further.
Deal on
Here, yes, this slide. Okay.
Yes.
So
you propose like a not only 20% cash deal and 80% stock deal. What is the rationale for such
okay,
breakdown?
the rationale is we considered the possibility of debt financing. Firstly, to do this, we analyzed that the current debt leverage of the company, and we came to conclusion that due to the high debt burden, both according net debt and debt to equity ratio, it's not entirely appropriate, since Just and Delivery Hero mostly have negative. Actually, they have very high debt burden. So next, we analyze the amount of cash in the Delivery Hero balance. We compared the share of cash in the company's revenue, and we came to conclusion that the company has a lot of cash on its balance sheet. We decided that it is not fully used in operational activities. Thus, 20% of this money can be used in financing the deal. Because if we look at comparables, yes, peers, we can see that they don't have such amount of cash on their balance sheet. So it can be probably, of course, we cannot use all of cash, but probably we can use such of it to finance the deal.
Okay, thank you. And what will be combined shareholding structure in this case? Have you analyzed this? What will have like a current Just Eat shareholders in the combined shareholding structure?
Okay, they share, yes, in the combined company. In the combined shareholder structure. Actually, sorry, we didn't analyze this, but it should be around 20% or 30%. just simply we can compare the purchase value with market cap. It should be, I can give you an exact answer in.
Yeah, I think 3.9 out from 7.9.
Yes, it's 3. Yes, it's about. It will be about 37% or 27%. Ah, yes, 37%.
And they might be like one of the largest shareholders of such combined company.
Yes, but if you look at shareholders of Just Eat Takeaway, there are a lot of minority. Like we cannot find there any investors with huge amount of share. Here you can see on the slide. Actually, you can open the first slide with Just Eat. So the shareholder that has the highest share is an investor that has about 5% share. So it will be not a problem.
And both companies are public, and I think that they might need some regulatory approvals, like anti-monopoly services. Have you checked in such way whether they can reach like a market share in such regions, like higher than 50% or I don't know 30%?
Yeah, thank you for your question. We particularly chose this company because we considered other possible companies, but they would have anti-monopoly regulation issues. Therefore, Delivery Hero, as you can see on the slide, by the way, on the right, we can see that their market share will not be higher than it is allowed according to law.
Okay, thank you very much.
Thank you very much. Very detailed analysis. I also have one question regarding the combined market share. So do you have any mitigants for a case when you, for example, don't get regulatory approval in some particular country, for example, in Spain?
I'm sorry.
You're on the mute, Anzor.
Oh, okay. Sorry. Yes. So potentially, yes, of course, we can assume that there will be such kind of problem, but in our opinion, 23%, as you can see on the slide, is not so high market share that can be a burden, or I don't know, it can be stop loss in order to close the deal.
And I chose Delivery Hero because we have not so many overlapping countries and we wouldn't have this problem of anti-monopoly regulation.
Okay, great. And just interesting, which market share you use? It's like in total delivery market, or like delivery from restaurants?
We took into consideration all shares and total, actually, yes, as you say.
So total delivery market.
Yeah.
Okay. Because sometimes, for example, in Russia, FAS can be quite creative in selecting the market to analyze. Like the different market shares can be considered. Okay, great. And my last question or comment regarding the capital structure. So you mentioned that Delivery Hero has quite high debt level, right? And you still advise us to use some cash, but in this case, the leverage of the company still increases in terms of net debt to EBITDA level. So here would be really great to look at like pro forma balance sheet post the deal to understand where we land.
Yeah.
Actually, yes, it's the problem is we didn't do such kind of analysis, but we considered this point, because that's why we didn't advise them use all of the all amount of cash, because we can understand that if they use cash, the level of net debt will rise, so the net debt to EBITDA will rise as well, and they will have some financial problems or some financial covenants. I don't know. That's why they can use only like such small amount of cash.
Okay.
And based on this slide, like net debt to EBITDA is for Delivery Hero
is negative because of EBITDA is negative.
Okay.
Yeah, guys, just for your future career, when you have negative EBITDA, right? For net debt EBITDA, you show just non-meaningful.
Okay.
And negative net debt EBITDA usually means the company has net cash.
Thank you.
Actually, yes, but in our opinion, we think that in the case of Delivery Hero is not actually, it's a little bit different, because they have net debt, they have debt, but it's the net to EBITDA is negative because of just EBITDA. But very good point. Thank you very much.
Okay, thanks.
Okay.
Okay, Tim, thank you for your presentation. I think there are no more questions from the judges' side. Yeah, thanks again. And the last team, please get ready.
Okay, so we are ready. Hello everyone. Today we are going to present M&A deal between DoorDash and Just Eat Takeaway. Here you can see the members of our team named after our racing team has. Now we shall begin. We propose to sell Just Eat Takeaway, excluding North America region, to DoorDash to create a dominant player in a global food delivery market. Just Eat is a leading online food delivery marketplace operating in 20 countries worldwide. We expect to close the deal in February 2024 and propose the offer price at the level of 27.3 euros per share, giving premium of 36% to 6-month VWAP of 20.1 euros. The financing structure implies 100% stock to stock. With the help of the deal, DoorDash will consolidate European and Oceanian markets, gaining an NPV of more than 1.1 billion euros in the form of cost and revenue synergies.
Let's start with a market overview. As we can see, the industry has been actively developing in recent years, and 12% average annual growth in the online delivery market is forecasted for the future. What is this growth based on? Firstly, after COVID-19 pandemic, many people discovered the benefits of delivery services and saw certain advantages. And secondly, the technological development of the food delivery system makes it more convenient and, as a result, more attractive to consumers. In the global online food delivery market, there are a few dominant players, primarily DoorDash and Delivery Hero. We have the highest gross transaction value and revenue, but their revenue figures are comparable to Just Eat Takeaway and Zomato, despite the latter having a much lower GTV. Let's take a closer look at Just Eat Takeaway. Just Eat is undoubtedly one of the industry leaders. The company is a key player in almost all regions where it operates. Despite facing strong competition in the online food delivery market, Just Eat has managed to maintain a strong position by constantly adapting to changes in the market and expanding its reach through mergers and acquisitions. Over the past 3 years, Just Eat Takeaway has doubled its number of orders, resulting in higher GTV growth rates and company's revenue. Despite the company's low EBITDA figures in the last 2 years, management expects EBITDA to be around 225 million euros in 2023. As we have already mentioned, Just Eat Takeaway operates in most developed countries and is a leader in many of them. It's worth noting that the company entered the US market through the acquisition of Grubhub in 2021
and already in 2022 demonstrated a positive value of adjusted EBITDA. However, despite this fact, Just Eat Takeaway is looking for ways to sell the asset due to the loss of market share. Despite its strong market position, the management performance of Just Eat Takeaway has been inefficient, which is reflected in the low share price. And since the merger with Grubhub, the company's market capitalization has dropped by more than 80%. In addition, Just Eat Takeaway trades at a significant discount to its competitors. The average EV to GTV, EV to revenue, and other multiples for its competitors are significantly higher. In terms of the shareholder structure, we can see that the majority of them are in deep losses. In addition to this, Just Eat Takeaway doesn't pay and doesn't intend to pay dividends, as they need to reinvest all the cash flow back into the company.
That's why we suggest an acquisition of Just Eat Takeaway by a strategic acquirer. We considered several potential buyers from different continents, especially paying attention to three factors. Firstly, operational activities should be connected to online delivery and marketplace services. Secondly, regions of presence ought to help create potential synergies. And thirdly, the company should have an M&A strategy and have a desire to acquire a new company. Consequently, DoorDash is a relevant choice in this case. DoorDash is a food delivery platform which operates in 23 countries. The company has M&A focus. It considers further acquisitions of companies and enhancing the current assets. And DoorDash has such opportunities due to fast-growing number of orders and GTV. DoorDash is a suitable buyer. The company has attractive unit economics and diverse partner and client bases. Furthermore, the market reacts positively towards DoorDash international expansion. Moreover, anti-monopoly legislation will not stop the potential acquisition of Just Eat Takeaway.
So now we come to deal rationale. First, strong leadership across the globe. GMV of a combined entity will be 1.5 times higher than Delivery Hero, being the second largest, excluding China. It will have presence in 38 countries. Acceleration of profitability, almost 250 million euros run rate synergies are expected, and 6.8% EBITDA margin in 2026, while Jet standalone has 0.9%. Proven track record of executing M&A and capital market transactions. Around 20 M&A transactions had the companies in the last 5 years, and 6.8 billion euros raised by both companies in capital market within the same time. Let's consider these points in more details. As you can see, combined company covers core markets, Germany, UK, and US. As we do not take into account North America business of Just Eat, they overlap in 4 countries in the European segment, Australia and New Zealand. Here you can see the dynamics of growth in GTV, revenue, gross profit, and EBITDA. GTV CAGR of a combined entity is 12%, when Jet standalone has 7%. Revenue CAGR is 13%, while Jet has only 7.4%, and gross profit is expected to rise at 15% versus Jet with 13% and much lower gross profit margins. Here you can see the major transactions of Takeaway, Just Eat, DoorDash, and Wolt on both M&A and capital markets. The most important things are combination of Just Eat Takeaway in 2020 and the following Grubhub acquisition. DoorDash acquisition of Wolt also happened in 2022. Let's get down to the valuation. Here are our considerations about valuation approaches. The most relevant method in our case is DCF, then goes comparables valuation and preceding transaction analysis, which is not quite relevant. The main assumptions in DCF are operating metrics growth in the regions of Just Eat operations, exclusion of North America from the perimeter of the deal. We also expect EBITDA to turn positive in 2026. Speaking about the valuation itself, we calculated WACC of 11% using the table presented in the left lower corner for the target capital structure of 96% equity and 4% debt. Terminal growth rate beyond the projected period is 2.5. In our DCF model, we arrived at enterprise value of 4.2 billion and equity value of 4.1 billion euros, which is 26% higher than current market cap. In comparables valuation, we can see the companies inside the same industry and with similar business profiles. As for multiples, we took EV revenue 23-24 and EV gross profit 23-24. We consider this multiple quite relevant because of the lack of profitability for several competitors. This way, we obtained implied equity value of 6.9 and 6.1 billion euros for revenue multiples, 8.9 and 6.5 for gross profit multiples. In preceding transaction analysis, in terms of valuation, we took transactions for the last 5 years with a quiet stake of 100% and over 1 billion euros. Besides, we considered deals only with strategic buyers. For a multiple, we took transaction deal size divided by LTM revenue and got a median of 6.2. This way we come to the range of implied equity value of 17.2 and 13.4 billion euro. Thus, we come to the share price ranging from 19 to 25.4 euros with a median of 22.2 euros per stock.
Let's get to deal analysis. Excluding North America from the deal perimeter, we expect realization of cost and revenue synergies in 3 related regions: Northern Europe, Southern Europe, and Oceania. Starting with cost synergies. First of all, Korea cost synergies come from Just Eat's transition to self-employed model used by DoorDash. Secondly, SG&A synergies will be released due to dismissing office workers, system management team, and associated costs. Then other operating cost synergies also can be released due to cutting down housing and associated expenses. We also expect revenue synergies on overlapping markets, as companies can increase combined GTV, sharing unique food partners. Exact calculations will be made during the full due diligence. Total net present value of cost synergies was estimated at the level of 1.1 billion euros. We proposed Just Eat the stock-for-stock deal, and on the slide you can see our offer price analysis with calculated premiums for Just Eat and the corresponding merged company values with definite stock exchange ratios. Considering potential deal synergies with our valuations, we believe that 36% premium to 6-month VWAP is a reasonable option for JET investors, following the exchange ratio of 0.29, which is a result of DoorDash issuing new 106 million shares at the price of 55.6 euros. Assuming the 36% premium, we believe that Just Eat takeaway combination with DoorDash will be accretive and beneficial for both parties. We estimate that in 2025, the gross profit per share accretion in the combined company will be at the level of 12%. Revenue and GMV accretion will be 10 and 0.6% in 2025, respectively. On this slide, you can see a value creation process. Considering potential synergies and transaction costs, equity value of combined company was calculated at the level of 26.9 billion euros, where according with 27.3 euros offer price and exchange ratio of 0.29, JET's investors will have 23% of all combined company. As for the terms of the transaction, we expect the whole deal to last 9 months. The preparation phase will start in June 2023, with the end of term sheet drafts in September. The non-disclosure agreement will be signed in August, and the full due diligence phase will end in December by signing the final binding offer. In February 2024, the sale and purchase agreement will be signed with subsequent deal announcement. Thank you for your attention, and now we are ready to cover all your questions.
Shamil, Oleg, you want to jump in, or I can?
Feel free to start as usual.
Okay.
Thank you.
Do you consider Wolt acquisition successful?
Thank you for the question. We believe that just Wolt was, in the first place, wasn't the really successful solution, and that's why we recommend to buy a new asset as Just Eat takeaway, excluding North American business.
And I also wanted to add that actually now Wolt is not performing well. However, that's definite that they spend a lot of money to compete with JET in Northern Europe. Even though they have profitable markets there, they still waste money because they have to gain market share.
Okay, so why this acquisition wasn't successful, according to your thinking?
Okay, so I believe that this success hasn't come yet. The time hasn't come up. So to accelerate this process, we believe that acquiring Just Eat will, let's say, will close the question of the success of this of the move into non-US markets.
Okay, I got the reason I'm asking because the management just bought huge overpriced asset, and they have certain credibility, and when we come in with a new transaction, so we need to have a strong reasoning why. Okay, I heard your point. You also proposed to exclude US business from the transaction perimeter. Am I right?
Yes, you're right.
And your proposed offer is still around like 4 billion, or could you remind, or 6 billion even?
I guess it's
maybe in term.
AVP list. Or you mean implied share price or the transaction space?
Yeah, well, basically the question is, first question, why so high, even though you excluded the US business? So why is so huge premium to the market price?
You mean the implied share price?
Yeah, well, I saw on one slide that it's around $6 billion. And currently what I understand, it's like it costs significantly less with US business.
No,
and
I
you
guess,
propose exclude US business. Maybe it's a negative equity value for US business, but not sure.
Can you open the summary, please?
Valuation summaries?
No, the executive summary. I guess enterprise value there was 4.1 to, I mean, equity value, 4.1 to 5.5. Yes.
And currently it trades around the same.
No, now it's slower. I guess now market cap of Just Eat is 3.3, and actually
with the US business.
With the US business, yes.
And you propose without US business, pay 4.1 / 5.5. So okay, it's just very, it seems very high. Oh, okay. No.
Well, we still have premium and synergies. That's why it's not a transaction size.
But do you include synergies in the offer?
Yes.
But why? I mean, synergies is that yet to be achieved actually by the acquirer with certain risk. So why you propose acquirer to pay them upfront?
Yes, actually, we estimated the risks of these synergies not being realized, and I guess still we calculated NPV of these synergies, so we can more or less be sure that some part of them will be achieved by a combined entity.
Okay, and last question, I guess. So when we exclude US business, from the transaction perimeter, assume Just Eat would accept the offer, but what would they do with the US business?
So thank you for your question. This is a really present. So this in process, and Just Eat in the process of selling GrabHub, and we believe that this will happen in the near future. So that's why in our analysis we exclude North America region.
Okay. Thank you very much.
Yeah, thank you, Tim. Would you like?
Okay, yeah, actually I have like standard set of questions. We asked them during the previous presentations. So basically it seems that the transaction multiple is much higher than current trading multiple of DoorDash. This first question, how you look at this problem. Secondly, have you estimated the combined market share in markets of presence? And like my last comment regarding the roadmap, it seems like this is roadmap for broad marketing of private company. It has teaser, and like in our case, we have kind of bilateral discussion between two parties. Just a comment.
Yeah, thank you for the question. So speaking about its second part, I would like to start with it. So we did not calculate market shares of a combined entity. However, we considered the potential problems with some regulatory, some legal problems, and actually, we do not think that there will be any because they overlap only in Northern Europe, Australia, and New Zealand. In Northern Europe, Wolt doesn't have so much market share, and in Australia and New Zealand, vice versa, Jet also has less presence. What was the first part of the question? Could you repeat, please?
Regarding comparison of multiples, like the implied bid multiple and current trading multiple of DoorDash. Ну, у DoorDash сколько сейчас? EV revenue 3,1, да, 23-го года. Вот. А какой implied EV revenue сделки?
Yes, show the football field, please. So EV revenue is 5.1 to 8.9. Well, still, we believe that actually we did not use preceding transaction analysis in our final valuation because I guess that's the most relevant method of those we used.
Sorry, я можно на русском буду? Немножко не уловил. Вот есть какая-то оценка компании, да, которая как бы implied бидом, то есть сколько вы за нее платите. Вот по этой оценке какой получается мультипликатор EV выручка?
So you mean the final offer price?
Yes. Ну, football field, maybe. Может, там есть. Ой, не football field, этот AVP.
You mean so what match company enterprise value and all this revenue per share, but here you can see enterprise value, and we can divide it by revenue, and we will get 1 second, please.
Yes, around 2.5.
Around 2.3, to be precise.
2.3, okay. And this is EV before synergies or post?
This is EV with synergies.
2.3. Oh, okay. Okay. So it's below the current multiple of DoorDash, right?
Yes, that's right.
Okay.
There was a multiple in the slide of preceding transactions, but can you move to comparables? Well, it's also 3.41.
Okay, clear. Thanks. Oleg, do you have any additional questions?
Yeah, thank you very much, Tim. I'd like to continue deep dive into excluding USA business and comparison of football field and AVP. I think it's well structured, but I just puzzled on the evaluation summary on football field. You have a range 19 until 25 for share price, but for AVP you propose 27. Am I right?
Yes, that's right.
And what is the reason for this?
Well, yes, AVP.
Here it's like a range from 19 to 25, and here it's like a star on 27.3.
Yeah, thank you.
And the different range. What is the reason?
Yes, thank you for the question. So we estimated potential synergies per stock, and now our offer price is driven not only by fair price, but also by potential synergies.
Okay. AVP includes synergies, but football field excludes synergies.
Yeah.
But football field include full Just Eat company, but AVP exclude North America.
No, also in football field, you can see the script. So that's North America is excluded.
Okay. And what is the size of North America business?
Well, you mean in the proportion of the whole value?
Revenue. I think revenue or EBITDA is profitable or not?
Well, it's adjusted EBITDA profitable. We can you open the appendices? I guess that's one of the last slides.
I just wanted to realize which part of the business you decided to exclude. Yeah.
Yes, here we estimated potential model up to 2032.
This is just for North America.
Yes. So you want to know the proportion of revenue?
It's revenue, not GMV.
Yes.
You excluded half of the business, almost. I just comparing like with the DoorDash combination slide, like a 33, and here the amount of revenue is 3.4 billion for 2023, and here you have for revenue 2023 2.7, and Just Eat like it has like half of the revenue in US, and you excluded it.
Well, yes.
Okay, and nevertheless, you suppose that you should pay the premium to the half of the business. It will be much more higher than 100%.
Well, still, it's half in terms of revenue. But speaking about the fundamental value of this segment, I guess it's less than 30%.
And why? And why?
Well, because we estimated it's like operation figures will decrease, and it's losing market share, as you know, and that's why I guess in the future, taking into account future cash flows of this segment, it's just like this.
Okay, noted. Thank you very much.
Thank you.
Yeah, I think that's it. Thank you very much, all the teams.
Yeah,
much appreciated. It was very interesting.
Yeah, thanks a lot. And I'll tell you a bit about next steps. So we'll put judges in the separate room to give the time to discuss the results, and like probably we'll be back in, I don't know, around 10-15 minutes or whatever time judges will meet. So Oleg, Maxim, and Shamil, I'll put you in a separate room. Please accept it.
Надо какая-то отмашка будет или можем...
Да, Максим, сейчас я посмотрел, что все вернулись из судей. Вот, так что вам слово. Сейчас будет объявление победителя и какие-то общие комментарии дадут.
Да, мне дали эту честь как самому старому, как сказали, да.
Уважаемый.
В общем, первое, что хочу сказать, я, если честно, удивлен качеством, в хорошем смысле, материалов. У меня от каждой презентации была зубная боль с детства инвестиционно-банковского. И это прям, ну, в общем, видно то, что много-много часов вы на это потратили, переделывали, переделывали. Молодцы. И у каждой четкая структура материалов. Каждая явно команда готовилась и ризонинг, и вопросы отвечать, и все такое. Мы при этом, ну, в общем, все послушали, вопросы там задавали, и внутри посвящались. В целом у нас достаточно вышло как-то единогласное решение, что победила третья команда Торо Росса. Большое вам поздравление, красавцы. Ребят, Олег, Шамиль, скажете тоже пару слов?
Да, спасибо. Спасибо, Максим, спасибо, ребята. Действительно, очень классная презентация. Я, наверное, хотел сказать, что вот в карьере в какой-то момент появляется какой-то вот один документ, который ты своими руками делаешь, такая серьезная книжка, и потом в будущем ты какие-то элементы из этой презентации, из этого анализа начинаешь как бы в будущем использовать. И вот мне кажется, очень круто то, что у вас еще как бы до начала, ну или там в самом начале вашей карьеры появился такой материал, вот, и там как бы уверен, что в будущем вот весь инструментарий, которому вы научились, очень вам поможет. Вот. Хотел общую ремарку по поводу синергии сказать. Вот как бы из моего опыта тяжелее всего доказывать revenue синергии, вот, ну, потому что они самые тяжелые в исполнении, это то, где у компании меньше контроля. А кост-синергия – это во многом находится в руках компании. Вот, соответственно, как бы их всегда проще доказать, и, наверное, ну да, в них все больше верят. Вот, все, спасибо.
Я тоже добавлю с своей стороны. Да, всем большое спасибо. Мне кажется, все презентации были достаточно высокого качества. В каких-то там аспектах, там в одних презентациях было углубление в одну сторону, в каких-то там в более другую. Мне кажется, что общий уровень, он у всех, там, кто сегодня выступал, достаточно высокий, и там то, к чему вы пришли, тот результат, там, которого достигли, он там заслуживает там большой похвалы. Вы все большие молодцы, что в таком там, достаточно раннем возрасте уже проделали такую огромную работу. Я уверен, что это будет там большой фундамент для всех в будущем, кто там, захочет связать свою жизнь с корпоративными финансами. Я думаю, что мы сейчас там по завершению дадим даже фидбэк как бы каждой команде, чтобы каждый понимал, что там пошло так или не так, вот, на чем можно сделать акцент и какие элементы там для будущего развития. Поэтому всех поздравляю, все большие молодцы, всем большое спасибо.
Да, всем еще раз спасибо. Поздравляю команду Торо Росса с победой. Спасибо судьям, что уделили время в этот субботний день. Да, спасибо зрителям, что смотрели нас. Мы сейчас будем заканчивать трансляцию и будем ждать всех желающих в следующем году. Просьба к студентам еще ненадолго задержаться, чтобы как раз у вас была возможность услышать какие-то комментарии от судей. Да, всем спасибо. Сейчас буквально минуту.